This is Soundhound AI on the monthly chart. Just some major levels of interest. Include the dollar level, right? Pivot lows. The $1.50 level, again, pivot lows. The $2.50 level, you have support resistance. $4 level, you have resistance. And then we have this major monthly support resistance band. Now that is a far cry from the highs of $18 that was set back in May of 2022. So had you bought at the highs due to FOMO and held all the way down, then I apologize. Let's get into this article before we continue with the analysis. It's kind of like if you invested $2,000 in Soundhound AI in 2022, how much would you have today? Soundhound AI once seemed like a promising play on AI. Its Hound-defied developer platform enabled companies to add speech recognition tools to their products without teetering themselves to a tech giant like Microsoft or Google. So when Soundhound AI finally went public through a SPAC, the bulls rushed in. When the merger was closed in April of 2022, stock hit $8.72. By May, it hit all-time highs of $15. Today, stock is selling for less than $2. So $2K investment during the first trading day of the merger, you would have less than $400 today. Why? It claimed that between 2022 and 2026 it could grow its annual revenue at a compound growth rate of 112% from 13 million to 1.16 billion. It also predicted that EBITDA margins would turn positive by 2024 and expand to 40.5% by 2026. However, revenue rose 63% to 21 million in 2021. It did surpass the target of 20 million and grew 47% to 31 million in 2022, which cleared its own forecast of 28 million. But this year it only expects revenue to grow 39 to 61% to 43 million to 50 million, compared to its original forecast of 110 million. Analysts still expect Soundhound revenue to rise 47% this year, 62% next year, 35% to 100 million in 2025. But it's now painfully obvious that the company's grossly exaggerated its own growth potential. A couple things to blame. Obviously, the interest rate environment that we are all living in. We see mortgages at sky-high rates. You also see the big tech getting into the space. You have Microsoft Nuance, Google Assistant, and other platforms are battling Soundhound. Soundhound generated over 2/3 of its revenue from its top 3 customers last year. Losing just one of those customers to Microsoft or Google would be a disaster. We also have seen insiders, they sold nearly 8 times as many shares that they bought over the last 12 months. That's not encouraging. Which suggests its stock still isn't undervalued relative to its near-term growth potential. Soundhound's broken promises, customer concentration issues, rising leverage, and narrow moat all make it a risky investment. It might be an interesting speculative play, but I don't think it's a value stock just yet. Alright, so let's scroll down to the weekly chart. And we can see that the current leg is down. Again, prices are making lower highs, lower lows. Just made a lower low as well. So again, most recent leg is down, momentum is down. Question is, how far will price go down before potentially becoming a valued play once again? Price is currently near level, which is soared back in March of this year. However, I have no faith that this level is going to hold. Reason being, the leg up could not take out and close above the pivot highs back in February, which tells me that the sellers are still in control, which tells me that price will eventually breach and close below the $1.50 level, which tells me that Soundhound could retest its all-time lows at $1 in the coming months. So if you've been looking at Soundhound, if it's on your watch list, just know that price can get cheaper. If you believe in Soundhound over the long run, maybe you start dollar cost averaging. If you held Soundhound from the $15 level and you're still in, it's not worth selling now. Again, assume that it's a speculative play. Thanks for watching. Subscribe. Please like the video.